Hello, welcome back to Learn Economia. In this video, we will be looking into some ways to invest in real estate. So, to be very frank, we will be answering the question how to invest in real estate. And when we invest in real estate, we should get some profits. And here in this video, we are going to discuss such profitable ways to invest in real estate. Let's get started. Buying and owning some real estate is actually an investment strategy, right? So in certain cases this could be satisfactory. If you are earning some profit, it would be satisfactory definitely, but in certain cases it would be lucrative. You might be having certain ways to suffer from losses. Unlike many other kinds of shares or stocks or many other kinds of investment arenas, like bonds, etc., prospective real estate owners can use leverage to buy property, and they will be doing this by paying a portion of their total cost. So you have to answer the question why people invest in real estate. So definitely that is an investment perspective. I mean, that is an arena for investment. For some people it would be, as I have already told you, to be satisfactory, whereas for some others it would be lucrative, right? So they would be buying a property and they would be selling the same property they would be selling, and in between they will be getting some amount. For example, they'll be buying the property for a lesser amount and they'll be selling the property for a huge amount. So the difference between these two amounts would be the profit for the person who is doing this business. Or sometimes it would be a definitely, though the small trainer requires 20 to 55% payment. In certain cases you can see that for 5% pay will do everything. This ability to control the asset for process. So see here, purposes are cycles, like one who property and one sell property, and there would be second amount and works brought the profit would be separately again to party. So we'll be looking into certain alternative steps or alternative arenas or alternative areas where you could go for real estate. So we can have rental properties. So this is considered to be a very good option for individuals who have to do it yourself kind of renovation skills and patience to manage tenants. But you have to see that this kind of rental properties does require substantial capital to finance upfront maintenance costs to cover the vacant months. For example, you will be buying a house. If you're buying a house, you are expecting the house to be sold in the near future or in the distant future. So what you would do in between is that you will be renovating the house. So you will be incurring some cost upon some renovation, and then you will be selling the house to some other parties. So in this case, what you will be expecting is that you will be getting you have to get the cost you have incurred plus the amount you have already paid to the seller who had sold this property to you from the buyer who would be buying this property from you, right? So not only these, but also you expect a profit. Now, coming to the pros with respect to rental properties, it definitely provides some regular income, and also it maximizes capital through leverage. Also, you can see that many tax deductible associated expenses are uh, associated with rental properties. Coming to the cons, you can see that if you are managing tenants, it is something very much tedious. if they have labor union or something like that, you have to deal with the issues and the demands raised by these people. And also this is considered to be potentially damaging with respect to the property that you are dealing with the tenants. Then also you will be getting reduced income from potential vacancies. If you look into the case of US, the US Census Bureau data says that the sales price of new homes consistently increased in value. This is between 1960s to 2006, and this has created some sale prices to resume, even surpassing the pre-crisis levels. So coming to the next thing, the next arena where you could invest with respect to real estate, that is real estate investment groups. So these are actually considered to be good for people who want to own rental real estate without hassles of running it. So you don't have to suffer any kinds of problems and issues while running this kinds of real estate business. Investing in these kinds of real estate investment groups will require some kind of capital to finance these kinds of things. So these are like small mutual funds and that would invest in rental properties. If you are a single investor, then you can own one or multiple units of self-accounted or self-contained living space. But the problem is that the company operating the investment group collectively manages all of the units. So they have to handle the maintenance, they have to do the advertising things, they have to do the interviewing of the tenants, etc. In a typical real estate investment group, what happens is that a company would be buying and the company would be building a set of apartment blocks, and then what they do is that this would be allowing the investors to purchase these buildings through the company. And you have to see that in exchange for conducting some kind of management task with respect to the real estate investment groups, the company would be taking a percentage of the profit or the percentage of monthly rent. And a standardized real estate investment group would be leasing in the investor's name. And we can see that as long as the vacancy rate for the pooled units does not spike very much, there should be some kind of revenue, or some kind of, what to say, there's some kind of return for you, which helps you to cover your costs. Then you have house flipping, next arena. So this is like if you're a person who is very much peculiar with respect to the experience of real estate valuation, marketing and renovation, house flipping is very much suited to you. And this would require capital as well as ability to do the repairs, all these kinds of things. Just as day trading is different from buy and hold investors, real estate flippers are distinct from buy and rent landlords. So here we can see that if you are a real property flipper, then you often don't invest in improving properties. You are not concerned about renovating houses, renovating properties, etc. So the investment here must already have the intrinsic value needed to turn a profit without any alterations. Here, house flippers, they are unable to swiftly uphold or upload a property, and they might find themselves in trouble. This is because they typically don't keep enough uncommitted cash on hand. So if they want cash, they may approach some kind of money lenders or something, or they might mortgage the property to get money. And this can lead to continued snowballing losses also. And this can be a flipping kinds of thing are considered to be a long-term investment if investors can only afford to take one or two properties at a time. Next, you have real estate investment trust. So here, so these people deal with portfolio exposure, and this is created when a corporation or some trust kind of things uses investors money to purchase and operate income properties. Like regular dividend paying stocks, estate investment trust is considered to be solid investment for stock market investors who desire regular income. If you compare these kinds of real estate investment uh, with, I mean, the REITs with other kinds of investment which we have already discussed, we can see that this particular investment could help the investors to enter into non-residential investments like malls, office building, etc. We can see that in practice, these real estate investment trusts are a more formalized version of real estate investment group. Both would offer some kind of exposure to real estate, but the nature of the exposure is different for these two different arenas of investment. Next, you have online real estate platforms. Many of you might be familiar with this. Here, actually, you can give you can make investment via online platform. The investment is made through this estate crowdfunding and all. This requires your investing of capital, although less than what is required to purchase the properties. Here, online platforms would be there. Different kinds of online platform would be there to connect different investors who are looking forward to finance projects with the real estate developers. So that's all for today. Please like, share, and subscribe to this channel for more videos, and you can be a part of my Telegram channel and Telegram group to discuss your doubts. Thank you.